inflation continues to skyrocket. So on the show, we're getting perspective from Balasubramanian. He is the Vice President at Teamlease Service, and he's joining us on India Tonight. Great to have you with us this evening. Tell us, you've probably looked at this Deloitte survey that has been done on CEO compensation packages, Balasubramanian. What are the reasons you see why these packages are rising in such a huge way in recent times? In fact, we're at the highest point in the last 3 years. And this has happened even as growth remains subdued all across. We've suffered the pandemic. At these times, such huge compensation packages don't seem to add up. What's your reading?
Yeah, thanks so much for having me on the show first. I think we need to put this in perspective. Now, superficially, yes, the wages have gone up, but if you look closely, they haven't. In fact, in real terms, they have come down, right? So allow me to explain this a little bit more. Now, FY21 was the year of the pandemic. A lot of people took pay cuts and CEOs were no exception. So the growth that you see relative to the previous year is purely owing to the effect of a lower base. But if you were to compare this to FY20, the year before the pandemic, the salaries in FY22 are actually flat. To illustrate this, let me just pick up one relevant data point from that report. In the report, if you look at the median compensation of professional CEOs, right, and generally looking at the median compensation is better because you remove the outliers at both ends. It says that it was 7.1 crores for FY20, whereas in FY22, it's 7.4 crores. That's an increase of 4% over 2 years. In the same period, the inflation was 13%. So in real terms, the salaries have actually gone down. Now, and if you look at the median CXO salaries in the same period, according to the same report, it's gone down by 10%, from 3.5 crores to 3.2 crores. And I think it's important for us to use the word compensation. Earlier, you mentioned salaries. These aren't just salaries. Now, these figures are a composite of salaries, bonuses, long-term incentives, and stock options as well. All right. And despite that, it's flat, and in real terms, it's gone down. So I think that's the reality of the situation.
All right. So what you're saying, Balasubramanian, if I can get this in context, you're thinking that the kind of increase we are seeing, there is a low base effect at work, and the kind of rise that we are seeing beats inflation doesn't beat inflation. In fact, it undertrends inflation at the kind of levels we are talking about. So it is not that dramatic as it comes across with the size of the numbers that we are possibly looking at. But in terms of the correlation between what's happening in the economy, the kind of growth stories that we've seen, do you find them in sync, whether it's in structure? And you did mention that this is a compensation package. There are variable components. There are a lot of stock options going out. So has that really changed? The structure of compensation, has that changed through the time that we've been in the pandemic? So now that kind of structural shift that we are possibly looking at, is that also likely to persist from this time onwards?
Absolutely. And I think the biggest takeaway for us is that the variable component or the at-risk component of the compensation for CEOs has crossed the tipping point of 50%. It's at 51% now. And it could increase further if you look at global trends, because it's a win-win situation. The potential upside for CEOs is far more if they were to deliver their targets, and it also works for the board members. It works for the shareholders because it's completely outcome-based. Now, earlier, a very, very small percentage of the total compensation was outcome-based. We were treating CEOs like bureaucrats, and they were also working like bureaucrats. But then increasingly, the tendency of companies is to hire CEOs who are more like entrepreneurs than like bureaucrats. And for that, you need to hire CEOs who can play the beta game rather than the alpha game, right? So it's high risk and high rewards. That's the kind of game, that's the kind of play that we'll increasingly see going forward. If you look at developed economies like the US, there are quite a few CEOs at the top in the Fortune 500 list whose variable component far exceeds 70-80% of the total compensation. And we are definitely headed in that direction. But that also means that the total base, that the total amount of compensation will also invariably increase over time.
What about the structure and the form of salaries outside the CXO's compensation package? Is that in sync with what we are seeing for CEOs, what this survey seems to suggest, how much of a correlation do you see over there in terms of the kind of profile of people that we are getting across sectors?
Yeah. So even if you look at senior leaders at, say, a president or vice president level who are just below the CXOs, increasingly their compensations are beginning to get variabilized. And that actually makes sense. Like I said, it's a win-win situation. They don't really stand to lose much. They only stand to gain more. And there is even more of an incentive for them to deliver to what exactly the organization wants, rather than working within their sort of short view or perspective on what they think they can do. So it's headed in one direction rather than multiple people working in different directions, which doesn't really take the company anywhere. And if you look at going back to the conversation about CXOs and CEO compensations, if you were to again benchmark these salaries versus global figures for companies of comparable sizes, even in terms of purchasing power parity, US CEOs get paid 4 to 5 times more for companies of comparable sizes, right? And this gap is going to reduce in the coming years. So for me, more than getting excited about CEO compensation being at its highest level in the last 3 years, I think it's more of a correction that's happened last year than something for us to get excited about. I'm more excited about the coming years, where this gap between CEO compensation currently in India and CEO compensation for companies of comparable sizes in developed economies, that gap is going to get bridged. And you will see that.
Balasubramanian, I wanted to quickly ask you, because we're running out of time as well, but I wanted to get you in on the sectoral picture, because technology ranks far higher than, say, energy or engineering design. In terms of the sectoral spread and the kind of compensation packages that they attract, at least at the CEO level, is there a trend building up over here? Because obviously there is going to be that much more traction for people into those sectors, wouldn't you imagine?
Absolutely, because technology sector has been far outperforming the market, be it globally or even in India for that matter. They command a very significant premium. Their price to earnings ratios are a reflection of that. And naturally speaking, the CEOs there in those companies would also command a significant premium. But then if the market trends were to reverse, and we've been seeing a bit of that in the last few months, of course, then naturally it will also have an impact on CEO compensations too. So it really boils down to sectoral and organizational performance as well, and not just to do with the person being a CEO of a company of a particular size.
Talk to you. Thanks very much for helping us understand what CEOs are making, the kind of compensation that they are attracting, the packages that we are talking about, and the shift that we are seeing within the economy, and what corporates are willing to pay the promoters and indeed these professional CEOs as well, and the kind of traction and comparison that we are making to other developed economies and what CEOs make over there. It's time for us to take a very quick